So you remember that hiccup I was talking about last quarter with Glanbia's performance nutrition portfolio of brands? Well, looks like quarter two, they still weren't able to shake those hiccups. So this video I'm going to be talking about Glanbia's first half 2019 earnings. We're talking about the first 6 months here, a little bit different than some of the quarterly breakdowns that I do on US-based companies. If you guys remember from some of the other videos, Glanbia is a non-US based corporation. They do have a major office, their Glanbia Performance Nutrition employees, a lot of their infrastructure in the US, but it is a Irish company, and because of that there are some different kind of accounting rules and reporting rules in terms of their public market. If you haven't watched one of my videos before, I'm talking about earnings breakdowns. I do talk a lot about numbers, but those numbers are utilized in a way to kind of tell a story and bring insights to you guys. I'm not going to be harping on a bunch of numbers that are going to be hard to follow. But let's kind of get down to the revenue numbers just as a whole of Glanbia and see what's going on in the first 6 months of the company. So wholly owned revenues were $1.6 billion. I did convert all of the numbers from euros to USD. If you do look at the report, you are going to see a little bit different of numbers, and that is because I did that conversion. But in the first 6 months, year over year, comparable to last period's first 6 months, that was on a constant currency basis, up 12%. And I look at these numbers on a constant currency basis because there is an element of currency fluctuation, especially in a lot of different markets. Glanbia is sold in, I think, over 125 different markets. So being a multinational company as they are, and any other kind of CPG portfolio of the size of Glanbia, you are going to have a ton of currency fluctuation. So we want to take that kind of currency fluctuation out of there because it's hard to make any type of comparison when you're looking at these numbers. So just like last time, I think it's important for us to break down that 12% growth element, because if you look at it just on paper, that looks like a great number. Glanbia made two larger acquisitions. It did create some problems from a comparative standpoint. So that growth number from the SlimFast acquisition and the Watson acquisition did create 10.6% of that 12% growth. Now, there was a volume increase of 1.6%, and then there was a slight pricing pressure, a little bit lower of price overall of 0.2%. So if you take the 10.6%, you add the 1.6%, and then you take away the 0.2%, you're going to get that 12% number. Now, if you haven't watched any of my other breakdowns of Glanbia, you might not know kind of what Glanbia is or what the portfolio is made up of. There is two main areas, one in which I talk about mostly on this video and one that I just kind of highlight right at the beginning. The one that I'm going to be highlighting at the beginning is actually a bigger piece of their business. That's the Glanbia Nutritionals business. This Glanbia Nutritionals business is made up of their US cheese business and then also their nutritional solutions business. So nutritional solutions is a lot of their kind of innovations on different ingredients, and then the sale of those ingredients to other nutraceutical businesses within the same space. And in this first half of 2019, they did see a 27% increase in that business. Now, of that 27%, the vast majority of it, I think about 20 to 22% of that, is made up of one acquisition that comes from the Watson acquisition I talked about before, and then also a volume increase of about 10 or 11%, so kind of equal amounts in that area. And they also saw a little bit of a better pricing kind of picture, I think a 3 or 4% price increase, and that was because of the dairy markets. It was a kind of a better positive dairy market. And the kind of the smaller piece of Glanbia is the Glanbia Performance Nutrition brands. Those are your consumer-facing brands. This is what I focus a lot of my attention on. Glanbia Performance Nutrition, the brand portfolio, is made up of kind of three elements. You have lifestyle brands, that is the newly acquired SlimFast. It's also Amazing Grass, and then ThinkThin, or I think it's known as Think right now. Then you have sports nutrition, that is their Optimum Nutrition brand, that's their BSN brand, that is their Isopure, and also their American Bodybuilding brand. And then there's also an international element to this. There is a consumer-facing brand called NutriAmino, and then there's also an online retailer called Body and Fit that has a private label element to it as well. So you heard the kind of positive aspect of the Glanbia Nutritionals piece of this. Now, you're going to be hearing kind of the other side of this, the Glanbia Performance Nutrition side of this. So if you look on just a constant currency basis and you compare it to the first half of 2018, you're going to see that the number actually increased 13.4%. So again, looks great. Optics look really good on that one. But if you kind of take a look at it and we break down what goes into that 13.4, you'll kind of see a little bit different of a picture. So you have 24.3% of the growth attributed to SlimFast, that acquisition of SlimFast that I talked about. So because that number is already higher than that 13.2%, you're going to see obviously a decrease in volume, which was 8.2%, and you're going to see some pricing pressure. So that was also the pricing overall was down 2.7%. So what this is telling you overall is that the Glanbia Performance Nutrition brands, the existing brands outside of SlimFast, are actually down year over year. Now, if you remember the first quarter one that I put out 3 or 4 months ago, I'll pop up a link here so you guys can watch that video if you have not done it. But the volume decrease was, I think, somewhere around like 15%. It was a really big number. And if you look at just the first half, the volume is now down 8.2%. So they did see a little bit of a comeback. There was some consumption that caught up to a lot of the volume that went in early, the sell-in that happened early in Q4. Q1, that was their kind of main excuse. They're saying, hey, we sold in a bunch of product in Q4. Consumption just didn't get to the point where we had enough of sell-through to have a proper amount of kind of reorders and volume that matched what we expected. And now you see it kind of coming back to life, but not at the point at which they expect it. So you're still kind of down on a volume on the first 6 months. And the company kind of described this in kind of a tale of two kind of cities. And you had the international piece, which makes up about 1/3 of Glanbia Performance Nutrition's revenue. And then you have the North American business, which is the bulk, the 2/3 of the revenue. So if we take a look at just the international markets as a whole, they highlighted a bunch of kind of different headwinds or kind of issues that they're having in the international market. One of them being like Northern Europe's transition from like specialty physical retail to online retail. They're saying that's speeding up quicker than they thought, and that's causing a lot of their existing channels, existing relationships to not be as fruitful as they wish, and they're going to have to transition that business a little bit quicker. They're saying some geopolitical issues, headwinds that are happening in the Middle East. I think most people, if you watch the news, you can kind of see a lot of those things happening. Another one, Latin America having a lot of economic issues. Again, watch the news, you see a lot of that stuff happening. And then they're saying India, they were transitioning some of the supply chain, they were transitioning a lot of their business model practices there. That's taken a little bit longer than they thought. There's some tariffs and things that they're trying to get around. That is an important nutritional supplement country, also just a country in general for consumer packaged goods. A lot of population increase, a lot of middle class kind of getting into and buying products that would resemble a nutritional supplement product. So it is a very important region that Glanbia is transitioning some different things, but they're seeing a slower kind of execution or implementation phase. Now in North America, they're actually saying and talking about things a little bit more positively. They're saying their major two focuses of channels, that is food, drug, mass convenience, and also the online channel. They said both of those are pretty strong. Consumption is pretty strong in those areas. They continue to talk about the downward trend in specialty retail. They talked about this gradually becoming a smaller and smaller piece of their business because of those challenges. I think they said it's 17% of their revenue now. And they also said there is some sell-in improvement that I talked about from quarter 4. They sold in a ton. They got ahead of themselves. They thought the volume would catch up pretty quick with some of the promotional things that they were dealing with especially the food, drug, mass convenience channels. But Q1, they fell on the face on that area. Q2, they're kind of coming back a little bit. So hopefully they're saying on the back half of 2019 that that'll clean up a little bit. Now to just talk about some individual businesses within Glanbia Performance Nutrition. They don't talk a lot about individual brands, but sometimes they do add some color around some different things. And one of the specific ones I think the most important to talk about is the SlimFast name, that acquisition that they made in November of 2018. Because that's attributing such a big growth element to their business, they're saying that business, like for like, even if this was just a part of the previous owner's business that's comparative to the revenue of 2018 for the first 6 months, they are seeing a 21% increase. So this business is growing really well for Glanbia Performance Nutrition. They've obviously been able to bring out some really good innovations. They've highlighted those innovations. They've said those things are really performing really well. Core products are now performing well again now under the new ownership. And they expect this rate of growth to be consistent through the second half of 2019. Now, another important one to note why they purchased SlimFast in general, there was some beverage element. Glanbia Performance Nutrition really focused on ready to drink, ready to eat. They had a lot of ready to eat different innovations and different products that they were playing with, but you were seeing a lot less on the drink side, on the ready to drink side. And SlimFast has a lot of that capabilities, that strength being added to the overall portfolio is helping some of the innovations just overall in the beverage space of Glanbia Performance Nutrition. Now, since we're talking about innovations, just want to kind of highlight a few that they talked about. Glanbia does have target in terms of what they look for. Products that were created within the last 3 years, they want that to be about 15% or more of their revenue. And some of the products that didn't exist 3, 5, 10 years ago are the leaders now. So you need to have constant kind of innovation, new product launches now in the market. Consumers expect that. So Glanbia is always kind of keeping their eye on new innovations and product launches. And they said they're seeing this across all of their different kind of categories. This is the ready to mix, the ready to drink, ready to eat. If you do just kind of look at their portfolio as a whole and you look at some of the new launches that they've had over the last 6 months, 12 months, you do see a lot of them being on the ready to eat or the ready to drink section of that. That is just because they're transitioning a lot of their portfolio away from a lot of the powder business and into more of the convenient, on the go, ready to eat, ready to drink items. Because that also goes along with what they're doing with some of their sales channels. They're focusing a lot of their time on food, drug, mass convenience channels, club channels. So you have a certain type of product that needs to go on those shelves, and they are obviously transitioning their products to meet the needs of their sales team and meet the needs of the channels in which they're trying to sell into. They also highlighted a little bit about the ThinkThin or the Think rebrand and just how that's going. They are saying there are some positive aspects of that. They also noted the competitiveness in the overall protein bar market, but they're saying there are still a ton of opportunities within that, regardless of how competitive that market is. And they didn't really highlight any particular innovation around Amazing Grass, but I think just Amazing Grass looks like kind of a more of a new age sports nutrition brand, lifestyle brand that's kind of a mashup of both, focusing on wellness and health over focusing on a lot of the other legacy kind of propositions. This is one that I've highlighted in multiple videos as kind of being the darling, the one that I believe has the most growth opportunity within their portfolio. They're saying growth is really good on that one. They didn't really highlight any innovations, but I wanted to make sure I at least commented on that because I think sometimes, regardless of your understanding of Glanbia Performance Nutrition, those brands and that portfolio, you might forget about that particular brand. Now, one last point I want to kind of bring up before I end this video, and this is around profitability. This is around something that Glanbia alerted to. They also changed a little bit of their guidance and different things, and because of that, they actually put out this earnings report a week before they were supposed to. Put this video together as quick as possible. Hopefully you guys are getting value out of it. If you have any questions or anything like that, make sure you guys do comment below. But what we're talking about here on the profitability standpoint is that there was kind of a very strong movement downward in terms of their profitability from a year-over-year basis. So the EBITDA actually decreased 30.2% on a year-over-year basis. And that EBITDA margin decreased 4.7% to 7.6% for the first 6 months in 2019. And Glanbia looks at a number that is somewhere around 13 to 15%. So these numbers I'm talking about on the profitability one are from just the performance nutrition brands. They do have a little bit better of numbers just as a portfolio, but they're saying this margin decrease was a result of negative operating leverage, negative price, and increased focus on lifestyle brands. If you're creating a lot of products in that area, being that they are, one, a little bit lower of margin, two, having to spend on marketing, trade spending a little bit ahead of your revenue, you're going to be having some issues in terms of that contribution to your margin. And they also are saying they're making a lot of investments towards their direct-to-consumer platform, so that's going to be customer acquisition. If you guys remember from some of my other videos, I talked about just the rising customer acquisition cost. Some of the expectation in the second half of 2019, they think there's going to be a lot of rebounding that happens to the consumption, to the volumes. They're also implementing some price increases, or they have already implemented some price increases in a lot of the markets, so they're going to think that is going to help. They think the price elasticity is going to be pretty decent, or they're not going to have all that much effect to it. What I'll say is if you look at other CPG portfolios, when they are increasing their prices, volumes do go down. Usually those consumers are changing over to a private label, or they're going after something that maybe is a little bit more economical, that has a similar quality element to that. So Glanbia, because of the strength of their brands, they're believing that there's not going to be a lot of that switching, but what I'll say is that seems to be pretty consistent across a lot of the different CPG portfolios, but kind of see what happens. They are expecting a pretty strong kind of rebound and a pretty strong kind of sell-in on the Q4 as well, similar as the last couple of years. If I get any more information, I'll make sure that I do break down some of those things, and also if I can get some insights on individual particular brands within the portfolio, I'll make videos as I always kind of do for you guys. I know you guys enjoy those videos, especially the BSN one that was extremely popular. So try to do some of those as well as information is available to me. Thank you so much for watching this video. If you want to help support me, make sure you guys hit that thumbs up button on this video. If this is the first time you've been introduced to my videos, would love for you guys to be a part of my community by subscribing to my channel. I upload several videos just like this weekly, and if you guys want to connect further outside of this platform, I do include all of my social media links down below. I just want to thank you guys again for your time. Hopefully I gave you some value in return, and we'll see you guys on the next video.